Stocks were little changed at the close of a choppy session on Friday. This followed the release of the June employment data that beat expectations. The employment report showed the economy created 372,000 jobs in June, and the unemployment rate held steady at 3.6%. Although the trading was choppy, investors seemed to take the stronger-than-expected jobs data as a sign the Federal Reserve will remain on its path to aggressively raise interest rates, with another 75 basis point increase in the benchmark likely coming soon. The employment report showed that despite increasing recession concerns, the labor market data appears to remain strong. Often, when an economy goes into recession, it doesn't do it slowly. It tends to fall off a cliff. And recessionary economies don't typically add 372,000 jobs per month. Even though the economy may feel recessionary to you or me, with the inflation pressures, the Fed is in a difficult situation. For now, the expectation is for further significant tightening from the Fed. On the whole, the week was weird, with the contradictory narratives flip-flopping from growth scares to inflation fears. The market responded with crushing commodities and bonds, while stocks were relatively strong, and gold was down hard while the dollar was up strongly. So, what do the charts show? Two charts today, beginning with the 6-month daily chart of the volatility index, or the fear gauge, and you can see the symbol is $VIX in the upper left using stockcharts.com. Now, this is a relatively cyclical move in the pattern here. It isn't all even, but you can see the ups and the downs. Now, looking at this line here, which is the 200 moving average, we can see that the base sets up here slightly below the 200 moving average. The interim move is above the 200. Here, the next base is again below the 200. The interim is above. So I'm looking for another base here to move down slightly below that 200 moving average and set up here for, say, a few weeks and see how the market simmers for the time being. But we have to watch this closely. As you know, we've talked about this trend line here, the below trend line moving up, while the top trend line here is more or less moving sideways. So the further along this move we get, you can see that the cycles are starting to coil, and so they'll tighten all the way to the tip, and then we'll have a strong move, likely up or likely down. I'm still thinking it's likely up given the upward trend of this bottom line here. All right, let's now go take a look at our charts. In our next chart here is the 1-year daily chart on the spiders, the SPY, and the close on Friday was 388.67, and from that bottom we're having a move on the way up. Now we're still in this channel. Here the bottom channel line more or less following through like that, and then the top channel line more or less moving through like that. So we're about halfway up. We have to wait and see. This halfway point we got reflected back down here. So we need to make it up through the 20 EMA, which we have. We need to make it up through the 50 EMA, which we'll look at next week, and then continue on up to this top trend line. And then there may be a change in the market if the price goes up and above this trend line and stays up there, if we have enough power and steam to get through that. I'm not quite convinced. Moving here in volume, you're not going to tell too much from that. Here in the MACD, you can see that this bottom here was set certainly lower than here and then here, and that's why we had this downward trend. Now, this move here is slightly above, so perhaps a change in the trend, but it's only a bottoming and basing at this point in time. We need to see this MAC move, both the fast line and the slow line, well up and above that zero line. That is going to take several days, if not longer. Moving here into the histogram, you see pretty much the same thing. Nice cycle up and down through here. Just continue to watch the cycle. We're on the up move. So when we get up to this level here, watch for some hesitation in the market. If there's a hesitation, we may head down. If not, if it continues, then perhaps we can make it up and through that trend line and change this downward trend. Here, price rate of change looks fine. We still have more to go before we get to, say, that 25, which was a level that we got above here, and we just touched upon in that move there. So hopefully we can move on up. Here into the RSI, we bottomed here, headed on up. We're above that 50 or midline, and it's a moderately strong 57.90. Nothing to crow about. We need to get further up and hopefully into that overbought territory above 80, as we were way back here. But it's going to take a lot to get up to that point. I'm not quite sure we're going to make it. Right now, I think the odds are for another downturn. Here in the stochastics, pretty much the same thing. We are having a move on up, but it doesn't appear to be all that strong. We're still not above that 80 level. I'd like to get up to that overbought territory, as we have, again, several times before. Now, here into the Williams has moved on up just barely into that overbought territory near that -20 line here, but it's having a hesitation, so we just have to watch that into next week. I think into next week the rally will continue, and we'll have to watch to see how weak or how strong it is. But it's going to take more than 1 week of a rally for us to get up and through these EMAs and up and through convincingly that trend line here, that upper trend line. So for me, I'm still on the sidelines, just watching and waiting. And for today, that's ChewDog Charts. Thank you.